quick start.
Wait. Hey, what's going on, everybody? We are live for Financial Fitness Friday. Dave couldn't be here, so I have my right-hand man, Joe Vicora, stepping in. And I got to tell you something, guys. We were actually planning to cover this stuff last week. I was away, and I think it's really, really important that we go through some of this, all right? And so what we're going to cover today is all in the topics, but we're going to cover 50-year mortgages. We're going to cover 15-year car loans, and we're going to talk about the digital ID rollout that is completely voluntary, done through Apple right now, and how it all ties into this global 2030 agenda from the World Economic Forum. Okay. And not only are we going to tie that in, we're going to show you how bad of an idea it is. Okay. So if you guys haven't been following, Trump has been talking about, and he's very proud to think that doing a 50-year mortgage is doing anyone a favor in 15-year car loans. Okay. And I'm here to tell you, it's probably one of the worst ideas ever floated as someone that voted for him 3 times. Okay. It's a horrible idea. It feels manufactured from above. And when I say above, I mean some of these globalist organizations. And here's why, right? One, it's bad enough if you were to finance a house right now. And, when you actually look at how much you pay for the house over the course of time, it is much more substantial than you would ever imagine. And you could just plug in a 30-year loan for, let's say, $500,000. In fact, Joe, you got the calculator up?
Yeah. So if you were to buy a $400,000 house, even putting a 20% down payment on, you're looking over the term of a 30-year mortgage, you're looking at paying a total of the same amount of the cost of the house in interest. So you're going to pay almost $800,000 for the cost of that house.
Yep. And so that's currently today. What rate did you have in there, Joe?
That's at 6.32.
Okay. And that's probably that's an average that you're.
That's about average for today. Now, guys, keep in mind, though, that does not include the costs of PMI, HOA fees, property taxes, and homeowners insurance.
Yeah.
If I factor in those costs, guys, you are paying exponentially more.
Yep. And that's over 30 years at 632, right? So
yeah, you're paying $120,000 for those
correct.
other costs.
Yep. And so now let's run that scenario. Same exact scenario, 50 years. And by the way, what's the payment on that at a $400,000 price point?
Are you talking about with all that included or without?
Do both.
All right. So without that included, you're looking at probably a monthly payment of $1,986.35.
Okay. Cool. And now most places
included, you're looking at a payment of $2,844.
That's what I was thinking, right? So $19,000 just for the house and the interest, and then when you add in all the other things, it's about $2,800 a month, right? That's your average rent. That is like today's standard, guys. All right. And this is it's kind of crazy, but this is why people pay extra, okay, to bring that down, because people think your house is a great investment, and it is. All right. But it's really important to understand how the numbers work. Now, let's do this scenario over a 50-year. So Joe's going to run that for us. And then while Joe's running that, I'm going to talk about a couple things, okay? One, think about how crazy it is. I'm almost 40 years old. So if I were to go and get a house now, okay, I'm not going to be done paying that off until I am 90 years old if I don't make any additional payments, all right? And the other thing is the way mortgages work is a lot of that interest is actually front loaded. All right. So you're making very, very, very minor, insignificant changes, okay, to the principal balance. In a 30-year mortgage, you're not even really touching or making a dent in the principal until probably year 5. Okay. And so when you expand that to 50 years, the numbers are even worse. So if the problem is you're basically stuck paying a lot of debt for a very, very, very long time. And that is going to not give you the ability to build wealth. It's not going to allow you and your family to actually move from whatever financial position you guys are in.
And guys, just to really break this down for you, over the course of the year, you're going to pay about $24,000 based on those payments. With that breakdown for your first year of paying that mortgage, you were paying $20,000 in interest and $3,600 in principal.
Correct. That's crazy. That is absolutely crazy. That is like 0.5% of your principal.
Now that's for the 30-year term. At the 50-year term, which by the way, guys, only lowers your payment by about $200. So you're going from 19 to 17 for an extra 20 years,
which means nothing in the terms of cash flow, guys.
Yeah. So you're going to pay $21,000 in that first year. You're still going to be paying $20,000 in interest, but guess what? You've only paid $928 in principal.
Okay. Now let's run the numbers, the absolute numbers on a 50-year. Okay. Just so everyone understands how bad of an idea this is and how much people should push back. And then I'm going to tie everything else together. The digital ID.
So remember, we talked about that interest rate on the 30-year mortgage of being a total of $395, which is still an exorbitant number. It's literally the same cost as the house you're buying. If it's a $400,000 house and you buy that over 50 years, that has gone up to $740,000 in interest.
Yep. So think about this, guys. On a $400,000 house today, okay? And was that with 20% down, Joe?
Yeah, that's with the 20%.
That's disgusting. Okay, because most people don't put 20% down. Most people put 3.5% down. So if we're saying, hey, we're doing 20% down, that's a better situation than 99% of the people that are actually purchasing homes today. All right. And you said 740 in interest?
Okay. 740. It's like 738 and change, but
okay. So you're looking at paying almost $1.2 million, okay, for a $400,000 house. And that is on the best of terms. All right. And so what this does, guys, is it basically says that it follows the World Economic Forum agenda, okay, of you'll own nothing and like it. Because the reality is, if you're paying that much for your home, okay, it's a burden, okay? It is an absolute burden, okay? And then if you do the same thing with cars, and by the way, guys, have you ever kept a car 15 years? Okay, I think less than probably 2% of the population has actually kept a car for more than that time. All right, and why does this matter? Because why would you want to pay a car? You're going to be paying for a car. Most cars are traded in 3 to 5 years. Okay, they're not even built these days to last 15 years.
Guys, most of the auto industry operates on something called planned obsolescence. So many years ago, probably around the mid to late 90s, auto companies realized that they were building cars that were outlasting the product life cycle. That's why the auto industry struggled so hard during that time, because what was happening is they were building cars, and then by the time they needed that customer to buy a new car, the car they had was still working fine. So what they did was they lowered the quality of the manufacturing specs. Phone companies do this too. So like that's why you need a new iPhone every couple of years. So what they did is they lowered the manufacturing specs so that you had to buy a new car, because you would start experiencing financial breakdowns. So it would, you have problems with the transmission or the electrical work of the car. And you would basically end up factoring in like, hey, if I'm going to spend this much on repairs, I might as well just buy a new car. Or, hey, if this phone keeps freezing and causing these many problems, I might as well just buy a new phone. They do that on purpose, guys.
Yeah. So
if you stretch that out over 15 years for a vehicle that has max a 5 or 6 year lifespan, you're just setting yourself up for failure.
You are in trouble, guys. Okay, because then you still have 10 years of payments. How are you going to get a new car? All right. So these are things that we all have to speak up about. And what's the real solution to fixing this problem? Right. One, the general population has to be way more financially savvy and literate. Okay, that's why I do this every Friday. And I've been doing this for 4 years. And then 2, okay, and I think one of the bigger challenges is the real reason this is going on is because you have BlackRock, Vanguard, State Street, all of these massive wealth management companies that own most of the big Fortune 500 companies, okay, there's two issues. One, they're buying up all the homes, okay? If you actually look at what like a BlackRock will do, they'll build a development and then they'll buy 3 of those homes, okay, for a exorbitant amount to reset the market of those homes, okay? And then everybody else, now you have the comps or comparables, and everybody else has to buy in at that. And then they're buying up all the other single family homes, okay? And if you look, what's the guy's name that is the top of World
Larry
Economic? Larry Fink, okay? Larry Fink is the CEO of BlackRock. He is also the head now of the World Economic Forum. And they want to enslave the population. They want complete control over everything. You can just look at their website. I'm not making this stuff up.
And guys, guess what? You want to know why all these single family homes were on the market in the first place? You know who caused the 2008 financial crisis and created the credit default swaps that led to the bank failures? Larry Fink.
Yep. And so now you have this guy that is in charge of the most evil organization who also manages the most money on the planet. It's not even close, guys. He manages more money than 90% of the company's 90% of countries' GDPs. All right. That's not a joke. So when he does things, he can single-handedly crush markets. All right. We have not enforced antitrust laws against these companies, and they have gotten out of control. And now you have really evil, power-hungry people at the top that are making this a problem for everybody else. All right. It's why most people are struggling today. That is the truth. And now you have some of these technocrats, okay, like Apple, and the missing piece for them to have complete control, okay, is a digital ID. Because once you have a digital biometric ID that will connect to your bank account at some point, just like they do in China, okay, they can control every aspect of your life. And guess who just rolled that out voluntarily? Apple. If you don't believe me, go into your settings, look at Apple. They just have your new digital ID, which, by the way, is going to be accepted at airports or is available to be accepted at airports now. All right. And the crazy part about this is, I bet you people are voluntarily signing up for this thinking it's a great idea. The reality is everybody should either boycott Apple, and I know that's a crazy statement. Nobody should be hopping on that digital ID, okay, because it is going to create problems that we will not be able to solve, okay? It is the last and missing piece. If you look at China, look at the model China has, okay? People can get deleted from their system, and now they are homeless. They're vagrants living on the street because they did something the state didn't like, okay? And they are trying to do that here, and they are trying to usher it in under the guise of safety, security, and financial freedom, all right? And this is a big, big problem that not a lot of people are talking about. The media isn't covering it. No one's really covering this. You have to actually look and do a little bit of research, which honestly nobody has the time to do anymore because everyone is financially struggling, okay? This is a massive, massive, massive problem, all right? The real solution is break up BlackRock, break up Vanguard, make them divest of any and all single-family homes that they own, and ban them from ever buying them again in their company or any other shell company that they are associated with.
Yeah, guys, the fact that we're in this country, we are allowing private equity to purchase single-family homes should be criminal. The fact that it is not is a direct slap in the face to every single American that wants to someday purchase a home.
All right. And guys, I know I talk a lot about finances, but I really do care about everybody. I care about this country. And if we don't start discussing things that need to be discussed like this and don't start educating and speaking out, it's going to be way too late. And it's already happening way faster than anyone can really get a grasp on it. And, you know, it's just always something that's concerned me. Okay. So I didn't mean to go all that long today. I know this is a longer than usual, but I really do want you guys to listen, to pay attention. fight all three of these things, and guys, don't sign up for any of them. Okay, a 50-year mortgage is a great way to go broke. A 15-year car loan is probably one of the dumbest ideas I've ever heard. Okay, and then if for those guys that want to fight me on the, well, boat loans are 20 years. Yes, I understand that. I have taken 2 boat loans that are 20 years. I've paid one off in 5 years, and the other one I'm going to pay off probably 5 years or less. The other thing is boats last a lot longer and have a much, much longer duration than a car. Okay, a boat, I can swap out the engines, no problem, and that boat's still going to go. All right, cars, people don't buy and keep cars like that. All right, and then the biggest problem out of all these, and I mean it, the biggest, is the digital ID. And I have been screaming that for a very long time. So I hope you guys are paying attention. I hope you guys share this with someone that needs to hear it. I appreciate you guys, and I hope you guys are kicking ass. Take care.